face-to-face class today, so I'm going to go ahead and I'm going to do this problem for you. This is problem 1-45A from chapter 1. It's one of your homework assignments. And we'll go through it really quick here. What we're actually trying to do is we're trying to show the effect of each transaction on this accounting equation. Here's your accounting equation. Assets equal liabilities plus equity. Okay, so we got a list of transactions. When you click on click the icon up here to view the transactions, and it looks like we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 transactions to book. Okay. So let's see. The first one says Sheen deposited $75,000 in a new business bank account titled Alan Sheen CPA. The business issued common stock to Sheen. So what happens is the business now has $75,000 more in cash. So I'm going to increase my cash account by $75,000. And on the other side of the equation, in the equity section, the common stock account, which shows the common stock outstanding, is actually increasing as well. Okay, so we're still in balance. If you took 75 on the asset side and 75 on the liability and equity side, your equation would still be in balance. So we click check answer and we get a well done. Okay, now we're moving along. On February 6th, we paid $250 for letterhead stationery for the new office. Okay, so stationery is a office supply, right? So we're going to have we're paying money out, so I'm going to show a minus $250 to cash, and then office supplies are going to increase by $250 because now we have $250 more worth of office supplies. Okay. Now after every transaction, you need to rebalance everything. Okay, so start on the right side here. Equity, you still have $75,000 in common stock. Now you have $250 more of office supplies, and your cash has gone down by $250. So now you have $74,750. Okay. Now I'm not sure if the system wants us to put zeros in for the balances that don't have any transactions, but I'm going to go ahead and do that. Okay, so if this works, we're fine. If not, we'll take them out. Okay, but sometimes they want us to show the actual balance in every account. In this case, we did well. Okay, so on the 7th, purchased office furniture for the office on account $9,900. Okay, so on account means that we did not pay cash for it. We borrowed the money, but what's happening is the office furniture supply company is extending our company credit. So now we have a liability. If we bought this on account, this liability called AP, accounts payable, is going to increase by $9,900. And what do we have? Now we have an asset, office furniture. Even though we didn't pay for it, we've purchased it using credit. Okay. Now, once you've done that, don't forget to go back and rebalance. So I'm pulling down all of the balances. And there's new balances for some of these accounts. Okay, but some of them, it's just a carry down of the prior balance. Okay, we can click check answer. We got an excellent. Okay. Now, February 10th, we consulted with a tax client and received $2,300 for services rendered. So whenever we've rendered services, we've earned revenue. So this is abbreviated, but now we have more service revenue. So $2,300 is an increase to service revenue, and it says we received. So over here where I'm kind of highlighting in blue, we received $2,300. That means that we have $2,300 more in cash. Okay. So we can do the math. We got, what do we have? 77,000 $50, right? Cash. Okay, because we've added 2,300 to it. No balance in receivables. Office supplies are still 250. 9,900 in furniture. 9,900 in payables. Common stock did not change. No dividends were issued. And then we have service revenue. Service revenue increased 2,300. Rent expense and utility expense. Okay, we can click check answer. We got a good job. Okay, notice if you were to add up everything on the right side of the accounting equation and compare it to everything added up on the left side, it should equal. Okay, we haven't been doing that, but just looking at the effects, we can tell that it's in balance. Now we paid utilities. Whenever you see the word paid, that's going to have a negative effect on cash. So we're going to subtract 190 from cash. And then utilities is in an expense. Excuse me, an expense. So an expense has a decreasing effect to equity. So on the right side of the equation over here, I'm going to show a minus 190. Expenses decrease equity. Okay. So what we need to do now is we need to rebalance everything. So we'll go over here and we'll say what do we got here? 77,000 minus 190. If you got trouble calculating that quickly in your head, up here on the right we have a calculator. So you can pull your calculator up. Oops. And I'll just put them in place here, and you can use your keypad. 77050 minus 190. And what do we get? 76,860. Okay. No change to accounts receivable. No change to office supplies. No change to furniture. No change to accounts payable. Common stock stays the same. Dividends, no change. 2,300 still in service revenue. Rent expense is 0. And then we're going to have that negative 190 over here. Let's think about it though. They actually have a negative sign in there. So I'm going to hit this. I'm going to hit enter, but it's possible that this negative minus sign takes care of showing this as a minus. Yeah, see? Refer to the information given. Okay. Think carefully about whether the accounts are increasing or decreasing. So yeah, actually, this expense is increasing. Oops. So we don't need to show the 190 because we have a minus sign right here in front of it. We don't need to show it as negative. So I'll just show it as 190. Oops. Actually, it's grayed out, so it's not going to let me change it. There we go. Okay. Fantastic. Okay, so be careful with that. They have the negative sign in there already. Now on 12/12, we finished tax hearings on behalf of a client and submitted a bill for accounting services of $11,000. So because we've provided the services, we've earned revenue. So we'll put 11,000 more in revenue here. Okay, but we did not receive the cash. So we have this thing called AR, accounts receivable. That means that we're waiting to receive that money. Okay, and then what we do is we rebalance again. Go right across. one at a time. Okay, now be careful here because you have a beginning balance prior to this transaction. You have 2,300 plus 11,000, so you're going to have you're going to have 13,300 in service revenue. All right, check answer. Well done. Okay. Now on 2/18 we paid the office rent. So office rent is an expense, and it's under here rent expense. So again, there's a minus sign in front of this. We do not have to show it as a negative. It is decreasing the right side of the account equation. 1,400, and the word paid, see the word paid, that verb in there means that cash was used. So that's a negative effect on cash, 1,400. Okay, so then we rebalance. So what are we going to have? We're going to have 75,460. Okay. 11,000. And I'm just pulling the balances down for the accounts that have no activity in them. If there was activity, then I will add it to the prior activity or the prior balance. Okay. See, every time we enter a transaction, we have to make sure that we're balancing the accounts. And this is what they mean by balancing the accounts. Fantastic. Okay. We got 3 more to go. Received amount due from client that was billed on February 12th. So this requires that we take a look back here. February 12th, we billed the client 11,000. That's sitting in an AR. Now we're going to collect that. So what happens is we're receiving cash of 11,000, and then this amount that's due to us is going to be decreased. So I'm going to put a negative in there, right? And that'll offset. Those two will offset each other on the right side of the equation. So the total on the left side does not change, as does the right side. The right side doesn't change either. Okay. So we basically have to subtract that, add that to cash. So I'm going to have 86,460 cash. I no longer have an amount due to me. And then the other balances remain unchanged. Fantastic. Okay. On the 27th, we paid the full amount of accounts payable created on February 7th. So back here on February 7th, we had 9,900 in accounts payable created. Now we're paying that off. So I'm going to have to subtract 9,900. So that's a negative. I'm paying that out of my cash. And then at the same time, my accounts payable is decreasing. So 9,900. I no longer owe that. So we're wiping this balance out, this amount due. Okay. So what are we going to have? We're going to have 70,000. Let's see. Why don't you just use your calculator? If it's holding you up that way, let's go 86,460 minus 9,900. Okay. 76,560, right? Okay. No change in accounts receivable. No change to office supplies. No change to furniture account. Now look, accounts payable is 0. We no longer owe that money. So we wipe that out. Common stock remains the same. Dividends remain the same. Service revenue remains the same. Rent expense is the same, and utilities expense the same. see how we did. Oh, it was behind the calculator. Okay, hit OK. And then the very last transaction, we paid cash dividends of 5,000. Okay. So see, when the dividend account increases, it actually has a negative effect on the equity section, the equity category. So the dividends are increasing by 5,000, but they have a decreasing effect on the overall, on the right side of the equation. Okay. And then at the same time, my cash is going down by 5,000. Right? We're paying, so the word paying means we use cash. So we can subtract the cash and come up with new balances. Now all I'm really doing is, see, now I have a balance in my dividend account. Is balancing the accounts. Okay, let's check that real quick. Well done. Right? Then, finally, we've recorded all of these transactions. Let's add everything up on the left side. So 71,560 plus 250 plus 9,900. So real quickly, I'm going to do the left side here. So I'm adding up these four numbers. Well, there's a 0 there. Okay. 71,560 plus 250 plus 9,900. That gives me 81,710. So I'll put that in there. Oops. See, that's the total of the left side. And then when we do the right side, we got 75,000 plus 5,000, right? So that's 80,000 plus another 13,300. Oh, be careful. See, I made a mistake. See, it's 75,000 minus 5,000. So that's 70,000. Okay. So we'll go 70,000 plus 13,300. You're adding the revenue. Then you're going to subtract these two expenses. So we'll go minus 1,400 and minus 190. And it's the same. We balance. 81,710. Great work. Okay. Now finally, I guess we're gonna prepare the income statement first. So we're gonna put the company's name there, and it's Alan Sheen CPA, and this is an income statement. And this is for, what is this for? This is the month ending February. So for the month ending February 28. Okay, and then the first thing we're going to do is revenue. And we have service revenue. Now, the balance in our service revenue account here at the end of the month is 13,300. Okay, then we're going to have expenses. Let's see, we have rent expense and utility expense. Okay, so I'll go rent expense, utility expense, and my rent expense is 1,400 and my utilities is 190. So if I were to combine both of my expenses, I would have total expenses of 1,590. Okay, so to figure out our net income, we'll take the difference between our revenue, 13,300, and our total expenses, 1,590. And that gives me my net income, 11,710. Okay, let's check. Got it right. Okay. Now remember, the statement of retained earnings, same way, headed up, Alan Sheen. Now we name the statement of retained earnings, and this is also for the month ending February 28, 2014. So he's a brand new company. he doesn't have any retained earnings to start with. Okay. Now you're going to take the beginning retained earnings and you're going to add the net income, 11,710 for the month, and then you make a little subtotal here, 11,710. Then you will subtract any dividends. So we got to go back and look at our accounts. Okay. What were our dividends? 5,000 in dividends. Okay. So I'll put 5,000 in here. Okay. So that's going to leave me with 6,710. Difference between the 11,710 and the 5,000 in dividends. Oops, what did we do? Did we do our math wrong? 13,000, well, 11,710. Wait a minute. I think we might have done our math wrong. So always bring out your calculator if you're not too. Well, 6,710. What were our dividends? 5,000. Well, look at seeing the statement heading. You see what I did? I doubled the name up. So I'm supposed to have statement of retained earnings here. Okay, let's see. Oh, well, if you get it all wrong, okay, see what we did wrong here? We showed it as a positive, right? You have to show your negative. You know, we did do the subtraction correctly, but it wants me to show it as a negative. So these parentheses indicate that that dividend is being subtracted. So it's a negative. A lot of times what they'll do is they'll say less. Over here in front of dividends, they'll use the word less. Then you don't necessarily have to show this as a negative. Okay, so it's just a matter of how we formatted that. Okay, also remember we're doing these financial statements in the order that they need to be prepared in. So it's always income statement first, retained earnings statement, and then balance sheet. So now we'll do the balance sheet. Balance sheet CPA, balance sheet. Now balance sheet is as of a certain date. So this is going to be dated February 28th. Okay. Oops. It's not a time frame. It's dated as of that date. Okay. So we're going to list our assets. And you can see all of your assets here. You're on the left side of the equation. We got cash. Accounts receivable is 0. We have office supplies, furniture. Okay, so we really have 3. I'm going to put cash in. We got office supplies. And we got furniture. Now what do they add up to? We got 71,560, 250, and 9,900. And 9,900. And if I were to add those 3 up, that would give me my total assets. And my total assets are 81,710. We had already done that math. So okay, then we do our liabilities. On the right side, we got accounts payable, 0. So we don't have any accounts payable. There's 0. Equity. So we have our common stock of 75,000. Then we have our retained earnings, and that's 6,710 from the retained earnings statement right here from there. Okay. So if we add those together, we're going to have 81,710 total liabilities and stockholders' equity. Oh, I'm sorry. We need a subtotal here. Okay, so total stockholders' equity it's a subtotal. Okay, because technically if you had a liability here, you would add the total liabilities to the total stockholders' equity to come up with the combined total liabilities and stockholders' equity. Fantastic. Okay, and that's that. That's problem 1-45A. We made a little few boo-boos in there, but good, so we know what to avoid. Remember to put the zero balances in if you don't have any amounts in those accounts, and then only use the accounts that have balances on your financial statements. Remember to prepare your financial statements in the order income statement first, which includes revenues and expenses, then the statement of retained earnings, okay, where you add net income to the beginning balance and subtract dividends. Be careful to make sure that you're showing the right positive or negative when it comes to dividends. And then you can prepare your balance sheet. See how the ending retained earnings here pulls over to the equity section of the balance sheet. Okay, thank you so much. And let me know if you